JB here. Hope everyone's doing outstanding. Wednesday, August 20th, 9:07 a.m. on this fine morning. Talk really quick about the market. Some names I'm looking at go from there. S&P futures slightly in the red, not too much, not too far to the downside. S&P down less than tenth of a percent. And on the heels of another red session yesterday. So that makes it three straight sessions of red for the S&P. Although Monday's session was a hundredth of a percent to the downside. So I can't really count that in the mix, but it is three sessions in a row. So yesterday's action was interesting. We started out pretty much similar to Monday's action, where opened flat, rallied to highs at 10 a.m. And then instead of finding support and chopping around for the rest of the day like we did on Monday, yesterday it's like the buyers just disappeared, hit lows into the afternoon, and then from about 1 o'clock on, we just kind of chopped around, and the markets closed pretty much right near the lows of the session. The Nasdaq took it on the chin. Um, now you start to hear the clamoring, right? And this typically happens when we have some sell-offs. But when we have sell-offs and there's names that have relative strength compared to the sell-off, then the conversation becomes, is this a rotation, right? And yesterday was semi names, AI. You had the nuclear names selling off. All the names that have rallied, momentum names, seem to be the ones taking it on the chin. Is short-lived pullback as the market was at all-time highs, people taking profits ahead of Jackson Hole. Maybe that's an argument that can be made. But today will probably be go a long way in seeing if this is the start of something, or it was just some profit taking, and we get back to some chop consolidation. Maybe we head higher. I'm still, to me, I think somewhat into Friday. I think the path of least resistance. I hate to say, like, I try to be optimistic, but I think more to the downside. And I think I was one of the first. There were a lot of people who were very bullish at the end of July, and I remember it was like a start of a week, and it was like Monday, and I'm like, it feels like we're going to pull this week. And then we did have the big pull and made some nice money on the puts. I'm not saying we're having a similar setup here. You just have that kind of like that feeling. And you look at the S&P the last three sessions, it's almost like there's like a leak, right? And if that leak doesn't get fixed, then the spigot, the water starts to come out faster and faster. Hopefully that the leak just goes away. We find some support here. I always try to look at things optimistically, or at least a glass half full scenario, because over time the market traditionally always goes up, right? So you take a look at the amount of stock trading over there, 50-day moving average I was talking about yesterday afternoon. There were more stocks trading over their 50-day moving average on the S&P at the end of the day yesterday than there were the day before. So that you can make the case that market breadth is decent or strong. And then the other was the VIX. I kept looking at the VIX yesterday. It's like up 3%, up 4%. Then it started to spike, and it's like it spiked to 5%. And then it closed up 3%. So another indicator. And I mean, some of the names I put it, half my watch list was in the green. So that might be some of it distorting a little bit on the VIX side. But also it was certain names that were taken on the chin. And when the ones that took it on the chin took it up, took big moves to the downside. So today's a big day. 2 o'clock, we have the Fed minutes. I keep talking about, you had the two dissenters. That first time we had two dissenters on a Fed vote in decades. So that'll be a big talking point at 2 o'clock. So want to see somewhat of a dovish spin. And then now earnings. So Target this morning, they had a beat, right? But then their guidance continued to be weak, and it was in line, but it still painted a picture of declining revenues. They've had 11 straight quarters of declining revenues. So, some people might make the argument that it's tariffs, but I mean, it's not a problem that just started, right? And then the other is, some people talk about their marketing. And so, I try not to do political spins and stuff, but to me, it's like when you try to do the political thing as a company, you open yourself to alienating 50% of your customers, whether your company believes in it or not. That's what you're doing. And, I hate to use this analogy too, and I don't know if Sicko Man's not on the chat right now, but if he listens to this, it's like me. If I pass a restaurant and I'm hungry, and there's two restaurants, and one has a banner of the Eagles, right? And one doesn't, I'm probably going to go to the one that doesn't have a banner of the Eagles, just because I'm a Giant fan and I hate the Eagles. Good. I don't hate Eagles fans. That's just me, right? If you're a fan of a club, so it's kind of the same thing. So Target alienated a lot of their base or customers just because of some decisions they made, and hopefully they can backtrack from that. But I'll be watching Target. I'll talk more about that later. But my point is, Walmart's earnings tomorrow morning probably take a little more importance. And as reports, reading all this stuff, McDonald's going to lower their prices 15% for their meals. That's going to roll out. So you have that aspect, and then they're talking about some of these retailers that are struggling, and they say, "Oh, it's the trade up." Now you had Home Depot and Lowe's reporting strong earnings, raised guidance, and they're like, "Oh, these are the better customers, right? Homeowners are the reason that these names are doing well," which I guess you can make the argument. Walmart, they're trying to I don't know, I wouldn't call them upscale, but that they were trying to at least compete somewhat, a little take a little bit of Target's base. So maybe that's some of it too. But we'll find out tomorrow morning. I think probably very big earnings tomorrow with Walmart. If they can kind of ease concerns, tariffs aren't that big an issue. Maybe that helps buoy stocks, but definitely something to watch tomorrow. And then, of course, Jackson Hole, 10 o'clock Friday morning. 85% probability now that the Fed's going to cut rates in September. That's down from like 95% a week ago. I mean, you got to think they got to cut rates. So I think if it gets to the point they're not going to cut rates September, that's when I think there might be some issues with the market. All right, so that's overall. So now just individual names. I put this on watch this morning too. It was like one of those take profits day. I call them harvest days, right? When you have positions and you start plucking them. I like to pluck them at substantially higher percentage gains, but didn't really have a choice yesterday. Once the market started to show some weakness after the open, I was watching MDB. MDB opened in the green, traded up near 628, excuse me, 229, almost near 230, and then just started to melt. And I didn't want to be in a spot where my profits eroded, so I closed the last of the 230s out for over 200%. And then I just held my spec lottos, and sure enough, just melted for the rest of the day. Closed down nearly 4% at 218, was pretty much where it opened the week. So still optimistic here. And you take a look, that 200-day moving average is right there, 230.75. You also have a potential golden cross setting up. That's when the 50-day moving average passes the 200-day moving average. That won't happen for a week or two, but their earnings are next week, so maybe it'll happen with earnings. But definitely continue to watch this one for potential move to the upside. Snow got an upgrade this morning. I don't know if that's going to push all the stocks in the cloud space, but it's up like $5 here, Bank of America. So we'll see if that helps put a bid back in MDB. But if it starts to find a bid in the morning, I might look for some more spec lotto calls. And then Lulu, similar to MDB, up to highs at the open, all the way at 206, and then just gave it back, reverse course nearly $10. Well, actually $10 at points. Once it started to reverse near that 203, where I forget what it was, 200 handle, 198 somewhere in there. I closed the last my 230 strikes. Didn't want to lose our profits on those. Still have those spec lotto calls for this week, which I already locked most of those in for some profits. So I'll just continue to hold those. If it finds a bid or the market finds some footing here today, definitely another name I still think is going to bounce to 220 plus. And then last but not least, here's a line all the way up to 149 yesterday morning. Right at the open was 140. Was it one? What did it open at? Why don't I have my 145? And then just boom, off to the races. By 10 o'clock, hits 149. Use some of the move to close out some of my calls for over 100%. And then I held the rest. And sure enough, nonstop, slow melt all the way to lows at the close. Close slightly in red. It has like an anomaly where I wouldn't even call it an anomaly. I call it a pattern, right? I guess that's what you call it. Where at the open, it seems like there's a buyer there. So I don't know if that's the company doing the buybacks, a fund. Watching it today, if it does the same thing, maybe that's a tradable pattern. I'll look for some lottos. So then on the flip side, I put on a watch list that 636 handle was a spot I'd be kind of more open to adding some puts or put hedges if we broke. And then we had the weakness at the open, and once we were trending around 640 and the Nasdaq had some weakness, I'm like, oh, looks like if we break 640, some of these names are going to take a bigger turn to the downside. So I didn't wait for that 636 break. I got some hedge puts on Broadcom. Sure enough, Broadcom all the way down to 292, was able to close some of those puts out within an hour for close to 100% to cover costs. Held the rest into today. When I had those puts in July, it was similar kind of move, right? Bounced up all the way up to 300. I was talking about this yesterday afternoon. Then down to 280, 292, and then it almost gets you out of the position. And then I held, and next thing you know, my calls were up 1,000%. I think I sold them, and they were substantially higher if I held. But similar, I start looking. I'm like, this might have a chance to trade down to 280. So I don't know if I'll, depending on what it does here today, I don't know if I'll stop out. Maybe if there's a bounce to 300, but I don't know what the rest of the puts going to look like. But I might just continue to hold them into 2 o'clock and see how the Fed minutes are. And then Palo Alto, after I ended those Broadcom puts, I looked for another position. I was actually looking at AMD puts. I think it was the 160s. I have to look, but it was reversing its earnings gap, right? And typically when you see names after earnings reverse gains, it's like maybe there's something up with the earnings, something more to the picture that meets the eye, despite a huge top line beat and guidance raise. So now it looked like gravity is going to take hold and it's going to trade back to 175. So I got those puts. I thought they'd be higher when it was testing 181 in the afternoon. They were up like 50%. Similar to Broadcom, I'll probably just hold those. Maybe I'll use 184 so as a stop. 187 is the 200-day moving average. Similar to MDB, it couldn't hold that 200-day moving average, found resistance. So that's one, I'll continue to hold those puts. And then on the flip side here, still have my eyes on Lemonade and Reddit. And Reddit I was talking about in the chat room yesterday morning, right? Opened, was it hit 238 and boom, all the way down to 226. And then it bounced, $9 bounce really quick. So trying to find the bounce calls is tough too, because the implied move is 7% with the stock for the weekly strikes. So you have 3 days to expiration and the stock is the option market is pricing in over 7% move. So it makes it tough to trade on a risk reward basis, but maybe as we get closer to expiration, I'll look for some lottos there. And then if you look at Lemonade, down 4% yesterday, but it's still, you look at the chart and all things considered, especially with the short interest, that bearish analyst reiteration yesterday, you have to think it's probably a good sign it's holding here. So I'll continue to look for opportunities to play Lemonade. And then last thing of note here, again, this morning, the VIX is pretty much flat here this morning, right? So especially event of Jackson Hole, and I don't even know what the implied move for the S&P is for Friday. Let's see, I pulled that up at the start of the week, but of course I didn't pull up today. $6.70. So yeah, it's a little more than 1% still implied into Friday, which, I mean, Fed days have had some much larger implied moves than Friday. And typically when I do the implied move, it's on a Friday. So Fed day is on Wednesday. So to me, it's like almost like maybe the Jackson Hole event is not going to be as big as perceived, and market's just going to price in more aggressive rate cuts, especially as we go out 6 to 12 months. That could be a possibility as well. Anyways, have a great day, folks. I'll be back on audio later. Rock and roll.